cool off after that initial pop on Gail. Let's take the conversation forward. Gail and lots of other stocks to discuss today. We have Prakash Diwan joining in. Prakash, good afternoon. Well, it's a quiet, relaxed afternoon before we get ready for the action in the night. But I want to start with Gail because of the inputs that Sonal was just sharing. It is a massive hike, right? 45%. Maybe not as much as what they wanted, but quite big. The only issue is the stock has run up in a year when the market's been, down 5%. Gail's already up 10%. What's your thought on this one?
Good afternoon, Surbhi. So, yeah, I mean, I do understand that there is a feeling that Gail has done very well in the recent past. It's run up. But actually, if you see, it's not still valued completely in terms of what the overall asset ownership it sits on. This price hike was something which people were more centered around, focused around, given the fact that it's a short-term impact and an immediate impact, right? And we've already seen that anticipation of about a 10% hike in the EPS. But what's interesting is that the moment the Gail assets start getting utilized for other things than just this particular thing, the gas idea, and then I'm alluding to the hydrogen possibility of hydrogen pilots being conducted for shipment of hydrogen gas. And if that were to kind of start working, there's no other solution provider with this kind of a scale and this kind of complexity. So, you need to look at it from a replacement cost basis, and you'll start believing that Gail is fairly undervalued. And of course, there's a great dividend yield that players would be here. It always rewards the government with a significant dividend. And even at this rate, the yields are fairly attractive. So I would believe this is more for the long-term investors, more for the, the long-only kind of funds. It's not something which is very exciting or very sexy. It doesn't move every day. Doesn't give you that kind of excitement on the charts. But yes, it's a great steady business to own if you're looking at an 8-10 year kind of a perspective, and if you have those kind of funds.
Prakash, stay with us. Let's just pull back a little bit to the broader market, right? Now, the recent underperformance of the market here has turned several sell-side brokerages tactically constructive on the market. Many are saying that this is a good time from where things should rally a little bit. Nimesh is here with what they're saying. Nimesh, over to you.
Thanks, Prashant. So as you rightly pointed out, it's a tactical constructive, so to speak, for the Indian markets. And there is a reason for it, right? We relatively underperform. The Nifty is down 7% and usually underperform the EMs as well as the DMs. So let me put out some notes which came today morning. So first is on CLSA. CLSA says that this is a contra buy time. That's the big statement coming in from CLSA. They believe that the sentiment is so extremely bearish that it's time to add beta to the India portfolio. Now they run their own bull bear index. Now that has reached 91% bearish level. This is what the report says, that it's come to 91% bearish levels, and that's the reason why. Barring few instances in 2008 and in 2020, they've seen such bearish instances 10 times in the last 15 years. And 9 out of 10 times, it has proved to be a good entry point into this market. So while I said, they're advising clients to add beta, so they've added a couple of names to their India portfolio. That includes names like Reliance, Hindalco, and IndusInd Bank, which have been the big underperformers starting this year. And they're replacing with Infosys, where they've taken an exit, as well as NTPC as well. So these two stocks have relatively outperformed as well. So that's a big call from CLSA. So on similar lines, even Citi has put out a note today morning, and they believe that the risk reward is turning favorable. And I'll tell you why. If you look at the numbers that they've put out, India has relatively underperformed this year. We are down 6-7% since the beginning of the year. If you compare to MSCI, India index, that has underperformed EM and DM both by almost 8% and 11% respectively. So we've seen a bit of underperformance, and valuations have turned attractive now. So CLSA note says that the valuations are now almost one standard deviation below the 5-year mean, and that actually turns out to be a good risk reward from an entry point of view. Even they run they have a sentiment indicator, and that is suggesting that it can give 1 year, at least mid returns in the next 1 year, and that has turned positive for the first time since June 2022. So again, the indicators are suggesting that because of the such bearishness, you might see a good entry and a bit of a tactical pullback rally. They have a Nifty target of 18,500 for March 2024. They've marginally cut down their multiples to 17.5 times, but still they are bullish from these levels. And even in their preferred list today, they've added 2 important stocks, which is Interglobe Aviation and Gail. These are the 2 preferred stocks in the India portfolio of Citi. But the bottom line is, given the extreme pessimism and the sentiment for Indian markets and the fact that we've relatively underperformed, many brokerages are now feeling that this is a time for a tactical buy, and CLSA is calling a contra buy time at these levels.
it. Nimesh, thank you very much for that. And to boot, I mean, S. Narain, Executive Director and Chief Investment Officer at ICICI Prudential Asset Management Company, threw in his weight behind this tactical recovery, tactical rally call. Listen in to his views.
See, at 17,000 valuations are much more reasonable, and the global macro people are just too short on everything. And we have a Fed meeting today, and it is possible that there can be a good relief rally. If all the shorts in the system have to be taken out, there can be a very good relief rally. The global funds have just turned too negative at this point of time without reason, because they had to go short somewhere and they found India a good place to go short. So I think tactically we are very well positioned, but at the same time we don't believe in very big market rallies.
Okay, tactically well positioned. Till yesterday, the FIs were more than 90% short in the Indian markets. We were hoping for some sort of a short covering rally, but today at least markets are in a wait and watch approach. Some more stocks just pop out. Shobha Developers, that's down close to about 12.5% as the income tax department is conducting raids. So they've raided some of the premises and that sent the stock crashing down. On the gaining side, you've got Imami rallying 6.5% ahead of a board meeting where they will consider a buyback. And Sula Vineyards has got a thumbs up from CLSA. The stock is gained close to about 5%. But with the stock price at 355, it's exactly at its issue price of 357. So in the last 3 months, 3 months of listing, the stock hasn't given any sort of return. Prakash, is Sula Vineyards a stock that you like? Is it attractively positioned?
Rima, yes, it is. It is a very attractive business, and I mean, you can anticipate some premiumization to the valuations, given the fact that it's the only of its kind, right? But and I did hear the interaction that Mr. Samant had with you some time back, where he's talking about how well positioned they are, how resilient they are in terms of impact on grape prices and all that. But interestingly, it's a B2C brand which is still got enough headroom to grow. But the biggest competition that comes for it is from imported wines. We've not seen opening up of that particular sector in a big way. But you have a lot of these East European markets, a lot of the new age wines which are waiting to kind of flood Indian markets. And then there's just a little bit of tweak in the regulation that might make all that possible. So if that were to happen, Sula probably loses a lot of the mind share that it today sits on. But apart from that, I think it's a steady business. I don't expect any fireworks because they really don't have that pricing power as yet. In that space, and I don't know if Nigel is still connected, but we've spoken about how fast growing the beer market is. So within the wines and spirits segment, I think the beer market is going to be much more promising given the seasonality and the kind of preponderance of our consumption patterns. In that, I mean, wines is just 2%, whereas beer is 8% of the liquor market. So you already have a head start of sorts, and that's where a lot of things could happen to surprise us positively. So yeah, I do like the stock. It's owned by a lot of people, so I don't know really who else is wanting to buy it, and that's why the price the increase in the stock price might probably be a bit labored from here on.
All right, Prakash, and talking about beers, wow, 2:30 in the afternoon, market's still open. You're talking about beers. Prakash, Som Distilleries, right? That's the one that you find valuation comfort, and we had the management as well. That's the one, right?
Yeah, okay. That's the one.
All right, what about the Vedanta group? That can't go out of action, right? I'm just wondering now what happens from here on. Because till the start of this fiscal, Hindustan Zinc was sitting on a good cash balance of 20,000 crores odd. Now, all of that has been drained out. Piece by piece, it's been drained out, and they've paid dividend of close to around 30,000 crores in this year. So all the cash generation as well has gone into dividend payout. And obviously, that benefits Vedanta Limited and then Vedanta Resources. How would you approach Vedanta Limited from here on? I'm not talking about Hindustan Zinc because the float is very minimal, maybe 2.5% in the market. Vedanta Limited, how do you approach it?
So, Nigel, today's turn of events is fairly interesting. I mean, it almost seems like Vedanta PLC Vedanta Resources ends up getting whatever it wanted to, at least a major part of the cash hoard that Hindustan Zinc was sitting. I think 7,000 crores comes its way, while the government also kind of goes home with about 3,000 crores. So in that sense, it's a very clear win for them, and it does help them at least shore up their balance sheet to some extent, where it's already been overburdened with a lot of leverage. Interestingly, the kind of composition of the businesses that Vedanta has, the listed entity in our case, is fairly poised for, interestingly poised for some sort of a growth trigger. I mean, you talk about metals, you talk about commodities, all of these, the way they rest into that, it could be promising. But the only problem with that business and that company and that stock is it kind of, hits you at times with surprises which are not very favorable. The kind of decision making of the management is not very minority shareholder friendly at times. And that's the reason why you discounted that way. But I think for the moment, they won the battle, if not the war, against leverage. So that's going to be a big respite for them.
Okay, do stay on. Need to slip into a very short break. On the other side, we'll invite our Alpha Manager for the day, Gautam Sinha Roy of ICICI Prudential Life Insurance. Stay tuned. Welcome back. Paytm is having a very strong session today. 5.5% rally on that. It's crossed its 20-day moving average, 50-day moving average, above that 600 handle on Paytm, and now it's approaching its 200-day moving average, which is 633. So moving up on very large volumes. JK Tyres, another one, 4.5% rally after the company secured about a $30 million or 240 crore investment from a marquee fund like IFC. So IFC has committed some money into JK Tyres' expansion plans, and the street is liking that move. Let's also talk about Bandhan Bank. That's surging in trade after the bank has approved the sale of the written-off portfolio and NPAs to an ARC. Abhishek gets us up to speed with the details. Abhishek.
Well, as you mentioned, Rima, Bandhan Bank's board has approved the sell-off of 2,614 crore, which is the written-off portfolio. It forms around 28% of the total write-offs that they have done in last 4 to 6 quarters, and about 2,316 crores, which is about 33.3% of the gross NPAs to ARC, that is Asset Reconstruction Company. So, bank has received binding bid of 369 crore on their written-off portfolio and about 370 crores on their NPA in terms of security risk basis. So if you take a look, the recovery rate of 14.1% on the written-off portfolio and about 16% on the sale to ARC, these are good recovery rates, given the fact that if you take a look at the historical transaction this year that we have seen of MFI portfolios being sold to ARC, the recovery rate is around 5% to 10%, but over here we are getting a healthy recovery rate of 14% and 16%. And also the fact that they have appointed Ratan Kumar Kesh as Executive Director for 3 years. He had joined Axis Bank in his previous role in 2019 and has handled retail operations across liabilities, asset, credit card, etc. Back to you.
Abhishek, thanks very much for that. That's Bandhan. Prakash, we've discussed this name in the past. Any new thoughts? Bandhan Bank?
So, as a matter of disclosure, I do have some exposure to this name. And Prashant, I would make it slightly generic. I think it's good tidings for this entire MFI pack. And we saw this happen to Equitas. It's happening to Bandhan. And if this continues for even a bit longer, it's going to be a complete U-turn for most of these companies, most of these businesses that have been struggling post the pandemic, slowdown. So I think the recovery rates are something which will make sure that they don't really add up more NPAs while the existing NPAs, the return of assets actually come back and straight away go to the P&L. So I think it's a re-rating, environment that's completely new to us. We've not seen that. We've seen this in PSU banks. This could probably happen to the MFI and small finance banks very, very soon. Yeah.
All right. Got that, Prakash. Good talking to you as always. You have a good middle of the week evening as you look out for the Fed, as we all will. And we'll catch you with the markets again soon.
Yeah.
All right.